Hey, good morning, everybody. It's Hammer. Today is Thursday, May 1st, 2025. It is the birthday of my little girl, who's not a little girl. When did I get old? She's 28. 28. Holy smokes. Anyway, my friends, good morning and happy May. April's in the books. We got May coming. Today, we're going to talk about tomorrow's BLS jobs data. We got that coming up. What are we thinking as far as locking and floating into the jobs data? We'll go a little bit deeper on that. We'll talk about Scott Bessent, Treasury Secretary, and some things he had to say in the headlines today that were pretty interesting. Also going to go, of course, into the technicals. We'll take a look at the fancy charts, talk about what's going on with mortgage-backed securities and rate sheets. So welcome and thank you for joining me. Remember, you can join me live each and every weekday morning, 9:30 a.m. Eastern Time, broadcasting on Facebook and on YouTube. I think we're going to start adding some stuff to this and actually follow through on my threat to promote this thing and get it loaded. So anyway, remember to join me live each and every weekday morning, 9:30 a.m. Eastern Time. If you would like a text reminder that I am going live so that you can hop on and not miss any of this wonderful show, go ahead and check us out at hmmr.io/reminder. That's hmmr.io/reminder, or use this cool QR code. If you're on your phone right now, go ahead and take a screenshot and you can come back to your photos and the QR code will work. I think that's awesome. QR codes have gotten so much better since phones have made it so that you can actually use them. So anyway, remember, you can join me live each and every weekday morning. If you're watching the replay, don't forget, give me a hashtag replay in the comments. Let me know that you were here. Let Facebook and YouTube know that you're here. If you're watching the replay and you want to jump forward, you could just look for the Let's Get Started down at the bottom of the screen. So anyway, if you're here live or on the replay, don't forget, if you're on Facebook, give us a thumbs up, smash that like button, maybe tag an originator friend to start watching, share this post in a group. Also, if you'd like, you can go ahead on Facebook or on YouTube and subscribe and give us a thumbs up as well. Let's go ahead and say hi to all of my live friends here this morning. That's right. I've gone back to this because I like saying hi to my friends. And I know some of you want me to go faster in the morning, but well, you know what? We gotta be in this for the long haul. So good morning, Candido Diaz, Ron Siegel. Good morning, sir. Mr. Ron Siegel said today is National Chocolate Parfait Day. I love a chocolate parfait. Isn't that like pudding with chocolate and vanilla? Is that a parfait? What's a parfait? Parfait, like I thought, is a parfait yogurt? I don't know. Chocolate, I'm all about chocolate. You had me at chocolate. Good morning, Amy Blauser. Good morning, Mark Clark, James Mahan, Mallory Fotiadis. Giddy up, Mr. Randy Tiekle. So happy to see you. I'll be seeing you soon in July, my friend. Kyle Mazikas, good morning, Amy Blauser, Angela Walters, Tim Klyla, Debbie Richardson. Mortgages with Mike Brown. So that must be Mike Brown. Almir, good morning, Sir Kathy, Candido, Rob, Tom, Mike, Benoit. Great to have all of you here. Thank you so much for joining me. I appreciate all of you as you spend your time with me. Let's go ahead and get started. Let's jump in, talk about what we got going on this morning with all the good stuff here. We'll start out with a quick recap. What happened yesterday. So if we take a look here, this is the 24 and 48 hour chart. So this in front of this dotted line is everything that happened yesterday for more securities. You see these little up and down movements as they were trading, but at the end of the day, really just everything was kind of set, right? We know in the morning, sometimes we see a little more erratic trading, but overall things kind of ended the day exactly where we started. So when pricing came out, we were around, we want to be right around 10 a.m. We were right around 99.70. We ended the day right around 99.70. We were up a couple of basis points, not enough to get excited about. Bonds are steady through the day. We kind of have seen a little bit of a stall when it comes to rate sheets. In fact, here, let me make this full screen so you guys can see this with me as well. So taking a look here, mortgage-backed securities were kind of the same. Rate sheets have been the same, 6.82, 6.81, 6.81. Now, today, rate sheets, they should be a little bit improved. Right now, we're up at 9 basis points on the morning. If those gains hold until 10 a.m., that's enough to improve pricing just a smidge. You're not going to see rates improve, but you'll see pricing improve just a smidge. Take a look here at the Japanese candlestick chart over here next to me. When you take a look here at this puppy, look at how we have seen a really nice increase. And I'm going to make this a little smaller. All right. Now take a look here. You can see, let's talk tariffs, right? when the tariff stuff came out, we initially got a little bit of a bump. It came out on April 2nd. So we were right here. Mortgage-backed securities on April 2nd closed the day at 100.3. The day before, they were at 100.7. So we're at about 25 basis points less than where we were pre-tariff drama. And there was a lot of tariff drama. Now, we saw originally there was a bit of a flight to safety after the tariffs were announced. And when we look at what that did to rate sheets, we look at we were right here, 6.60, 6.63. We saw rates, drop down to, let's call it 6 and 5/8, right? And that was kind of our best pricing. And then, boom, we just got slammed, beaten, bloodied. Everything happened here. And we saw 200 basis points of loss in a week. This was total market meltdown, total chaos. If you remember, stocks were down 500,000%. Record levels. You get it, right? Of course, I'm being a little dramatic, but everything was dramatic. Now, since then, we have recovered quite a bit. All right. So again, April 2nd was when we had Liberation Day, when Trump announced tariffs. And the tariffs came in that were bigger than what was expected, and it started a lot of the drama. But on Tuesday, April 1st, and it was not an April Fool's joke, we were at 100, right about 100.7, right? So 100.07 to be exact. And we're really pushing right back up there. And as far as you look at where rates go, let me make this fit on the screen. Actually, let's go full screen. I'll show you this. What I wanted to show you is that on April 2nd, we were at 6 3/4, according to Mortgage News Daily. And today we are at probably 6.79. We're just like a little better than the 6.81. And that's about 25 basis points of difference there. If you go back a little bit further, and like right now we're at 99.78. Last time we were around these levels was March 18th, right? March 17th, 18th. We take a look here and we go to March 17th, 18th. Where were we here? Here we go. So 17th, we're at 6.8, 18th, 6.78. So we're right there. Lenders have kind of settled back in. If you remember, I said last week, a lot of rate sheets, they were a little slower, a little conservative to give it back, but they've given it back. And today, reprice risk is low. We've seen a big shift in momentum. Now, when we were seeing all of this volatility, there was tremendous cause for concern. We didn't know how bad things were going to get. There was no hope on the horizon. It was just ugly. But since then, we've seen this recovery. We've seen some really nice bounce back. We've seen mortgage-backed securities recover so much of those losses, right? And again, we were right around 100.7, so we're down about 25 basis points. Not too bad. When you take a look at the 10-year, on April 2nd, April 1st, we were at 4.16. April 2nd, we were at 4.16. And right now we're at 4.15. So the 10-year treasury yield has also bounced back quite nicely. And it's kind of put us right back in that same spot. Now, we did see a little bit of a shift in margins where mortgage-backed securities were not pricing quite as well as the 10-year treasury yield. However, that's started to, that's slimmed back down again. So we're the spreads, actually, I say margins, but it's actually the spread that I'm talking about that started to settle back in. So we're in a good spot. I mean, now the outlook, of course, will change depending on tomorrow's jobs data. Jobs data comes out tomorrow, 8:30 a.m. Eastern time. And Ron hit the nail on the head, y'all. So the Dow, I mean, Ron, how far was the Dow down in April? So for April, stocks took this huge crash and have come back, and it's down 3%, which is really not a lot with the stock market. So things have really settled in when we saw where April started with the tariffs coming in. April ended kind of the same place, a lot of drama in the middle. It was almost like a Hallmark movie, right? It kind of ends the way it begins, with a lot of drama in the middle. I don't know. I don't watch Hallmark movies, but that sounds like that would fit. All right. Let's take a look at some of the headlines. I kind of want to go over a few things with you this morning. So this morning, U.S. job claims jumps to the highest since February. So ADP private report data yesterday, not a lot of jobs created. This morning, jobless claims jump. Now, none of this means that tomorrow's labor market data will have weakness. It doesn't mean anything. However, it would continue the trend. And I think we are going to see some weakness to tomorrow's labor market data. But even if we don't, markets are really looking for the Fed to go ahead and start cutting rates. So remember, we got a Fed meeting next week. May 7th is the second day. Markets are not expecting the Fed will cut rates at next week's meeting, but they are looking for a rate cut in June. We're seeing a little bit of a creep up in expectation of that cut to come, and markets are going to be looking for Fed Chair Jerome Powell at his press conference to basically drop breadcrumbs saying, hey, we're going to see a rate cut. And we haven't seen, right now we're in the Fed's blackout period, which means the Saturday before the Saturday, about 10 days before the Fed meeting, the Fed members are all gagged. They're not allowed to talk, right? But we want to keep an eye on the Wall Street Journal because next week, yes, I hear you, Ms. Millie girl, but I'm talking. So next week, we are going to hear from our favorite Fed whisperer. That'll be, hold on, let me get her. She's just going to keep meowing at me. Come on. Yes, I know, but you got to tell everybody. Come on. Tell everybody hello then if you're going to do that. Come on. Come here. There you go. Say hello to everybody. I know. Look at you. You're such a troublemaker. So anyway, as we look tomorrow, do I look like Mr. Evil? Tomorrow, as we go into next week, we will see Fed Chair Jerome Powell generally use his mouthpiece, Nick Timiraos. We'll see some stuff in the Wall Street Journal. Now, if you look here, it's important to see a few things that are going on with Treasury Secretary Scott Bessent. Bessent has said that 2-year Treasury yields are signaling that the Fed should cut. And what does he mean by that? He said, we're seeing that 2-year rates are now below the Fed fund rates. That's a market signal they think the Fed should be cutting. Now, we know that the market thinks the Fed should be cutting. The market's been very clear about that. The thing is that the Fed hasn't said that they'll be cutting. Now, I think, though, that this meeting, we've seen so many things change recently, but I think we are in a position where we could very much see the Fed loosen up on this concern about the tariffs, because there's a lot more talk of possible deals. Now, Trump says tariffs are politically risky, but he's not rushing deals. President Trump acknowledged the sweeping tariff program had risked imperiling him politically, but said he would not rush deals to appease nervous investors during a town hall on Wednesday. Now, again, Trump reminds me of Steve Jobs over at Apple, right? Steve Jobs, who of course has passed away, but Steve Jobs was the CEO of Apple, and they said that Steve Jobs lived in a reality distortion field. He created his perception of reality. And so in other words, you would say, hey, Steve, this Waterloo is lemon lime. And Steve would say, no, it's strawberry. And Steve would convince you that it was strawberry because he was so insistent that this lemon lime soda was actually strawberry. And that's what Trump does. And, again, I think it's like a character. I think it's a character trait. I don't think it's a pure manipulation, but Trump will tell you that the tariff stuff, the overreaction in the markets, that wasn't his fault. He says, hey, that's not my problem. That's not my fault. All right. He said, but I'm an honest guy. We have to save the country. Trump went on to agree there was significant political risk to his efforts and they would result in Republicans losing control of the House in the midterm elections. But again, there's so much time for this. What happens is we've seen the MO before. He went in guns blazing, shock and awe, create huge, huge drama, then dial it back. And everybody is so shell-shocked by that shock and awe when we see the actual tariffs and we see things happening. People are going to cheer for him. And I think it's what's going to happen. So basically, the reason I'm bringing this up, we're talking about this, I don't care if you love or hate Trump, but you've got to know, what does the Fed think on all this, right? Trump, of course, still picking on Powell, made some comments that he knows better than Powell. We talked about that yesterday. Ron and I kind of disagree a little bit on that one. I don't know on some of the rest of you. But, Ron's definitely, he hit the nail on the head. He said the market always wants the Fed to cut. Even at zero, they want to cut because they want to make more money. Most businesses borrow. Interest reduction is good for them. Lower interest is also good for the U.S. budget since the U.S. spends so much on interest. And I think that's what's going to happen. So keep an eye on Basent and some of the things that are said here, because this is the thing, right? So Basent, who is a market guy, right? When we talk about how the market always wants somebody to cut, Scott Basent was a hedge fund, right? Was it Ron? Wasn't he a hedge fund manager? He's definitely a Wall Street guy, and he is looking for the Fed to cut, but he's not going to sit back and wait. The Treasury also looking to revamp their what's called their buyback program. So the Treasury Secretary said it's now looking at enhancements to its buybacks of older U.S. government debt securities, just weeks after Scott Bessent hinted the potential to beef up the program in the event of any major market turmoil. Remember, too, there's a whole formula for how much of the Treasury's debt is put out there in short term and long term and things like that. And they will look at manipulating that to help get longer term rates like mortgage rates to come down. All right. So this is an interesting article kind of on where they're at. But as it notes here, Treasury's rebounded after the recent sell off. And we saw that here. I mean, the 10-year Treasury, that yield dropped all the way down for 3.88 for that day. Now, it didn't close there, it closed at 4, but it was down in the 3s, and it jumped all the way back up to 4.5, and then now it's back down to 4.15, right? So we have seen the gamut in April, but yet when we started April, we were, April 1st, 4.16. Here we are, 4.15. So we're right back in that same realm as where we were. Good morning, Katie. Good morning, Jerry. Mike Schmolgen. Great to see all of you here as well. So all of this to say with mortgage bonds, we have to, that's where, when you're working with your clients, you want to be talking about how you're monitoring the situation, help them figure out when isn't a good time, and then open those doors. As far as tomorrow's jobs data, I'm floating into it. I'm not really that concerned. Market's got a lot of momentum on our side. Let me throw that up on the bottom of the screen since it's taken me a little bit too long here. And so my advice is to continue floating, right? Cautiously float anything in the next, closing the first couple weeks of May. But anything that's closing after May 15th, I am floating it through tomorrow. We want to see what the Fed meeting brings next week. We have the opportunity to see rates actually improve to the best levels we've seen in a month. So I think we could see better pricing. The only thing that you want to lock heading into tomorrow is anything closing in the next couple of weeks that's risk averse. If we do see strong jobs data, it would put some pressure on the idea that the Fed needs to cut rates, right? And that's why it would not be good for mortgage rates. We would see this expectation kind of drop down a little, but markets feel strongly about this. They really feel that we are going to see a June rate cut. If that data comes in with any kind of weakness, higher unemployment, not a lot of jobs created, anything they can latch on to, they're going to be looking for that. And then, of course, as we head into later in May, we'll get the CPI inflation report and stuff like that. So let's see. Ron said, question of the day, market expects 130,000 new jobs. Who is the over and who is the under? I think that it'll actually be over that, but I don't think markets are going to have a negative reaction. So I'm going with over. Let me know in the comments. That is, I like Ron's question of the day. Market says we're going to see 130,000 new jobs, unemployment at 4.2%. Do you think that'll go higher or lower? Let me know in the comments. I think unemployment will be at 4.3. We're going to see more government jobs show up, that we're with the Doge thing. I think, though, we're still going to see more than 130,000 new jobs created because that number is so manipulated and fictitious anyway. But I don't think it matters. So Ron is also an over. I'm an over. Yeah, Ron, thank you for backing that up, that he was a hedge fund manager. So, all right, y'all, let us know. Dave Holland, this is like the Price is Right. 131,998. Who wants to go with one job? One job. Who's going with the under for one job? Jerry said he thinks it'll be higher unemployment. So we were at 4.2. Jerry thinks that's going to tick up. I think so as well. Ron also says higher unemployment. I think so as well. It's, now how can you have more jobs created and higher unemployment? Again, they're different surveys. The number of jobs created is a business survey where they're actually contacting businesses and surveying how many jobs are created. The unemployment number is the household survey where they actually contact people in a household and say, do you currently have a job? And if they don't, are you looking for a job? And that's the participation rate, because you're not unemployed if you don't want a job. We just call that retired. So yeah, Basent founded Key Square Group, a hedge fund, initial backing from George Soros, assets under management peaking at 5.1 billion. Thanks, Mr. Morano. Appreciate you filling us in on that. I thought we were there. So Mike's with or without adjusting. There's always adjustments. It's always seasonally adjusted numbers. So there's always going to be adjustments. But anyway, my friends, you guys told me you want long. I've given you long. Let's see what tomorrow brings. We'll talk about what's going on with the jobs data. I'm not worried about it, though. I don't think you need to be either. If I had loans closing anytime in May, I'm really not concerned. Anything outside of May, I'm definitely not locking yet. We want to see what happens at the Fed meeting next week and what kind of takeaway markets will have from Powell's press conference. Even if he won't give them what they want, are they going to pretend to hear it anyway? I think there's a good chance that they will. So, all right, my friends. Well, thank you for joining me. I will see you tomorrow. We'll talk all about what's going on with the jobs data. We'll be able to see who is right and wrong with those overs and unders. You're welcome, Dave Holland. Thank you, sir. Randy said, what type of jobs are being created? They do track that, and there is that in the deeper report, but even that, it's not going to matter. I mean, people, the number of hours worked and all that stuff is all relevant, but we know the economy is weakening. People are suffering, people are struggling, and it's just going to get worse. Are we going to see it on paper, and how deep? Well, we'll have to wait and see. So, all right, my friends, I'll see you guys tomorrow. Take care. Make it a great one. Bye-bye.